Welcome to my step-by-step guide to buying a home in Nova Scotia in 2026. This is the first-time homebuyer seminar for people who don't want to go to a first-time homebuyer seminar or don't have time to go to one. This is a great guide for anyone looking to buy a home in Nova Scotia. So let's get right into it. Who am I? I am Cheryl Cook. I love homes, and I'm a realtor here in Halifax, Nova Scotia with Remax Nova. And who is this for? Well, this is for first-time homebuyers or anyone who hasn't bought a home in a while and is looking for a refresher, or people who have questions about the process of buying a home, particularly here in Nova Scotia, where I'm located. And what are we covering today in this? We're going to be looking at the 6 basic steps in buying a home, as well as some extra information around pre-approval, the elements of an offer, offering below asking price, closing costs, and a little bit more. So before we begin, I'd like to go over a little bit of language that I'm going to be using throughout this, just to make sure that you have heard these terms and that you have this here to refer to if you'd like to come back. So first of all, we have a mortgage, pretty basic. A mortgage is a loan from a bank or a lender that's used to buy a home where the property itself is used as the security until the loan is fully repaid. Pre-approval is the lender's written estimate of how much mortgage you qualify for based on your financial situation. And when I'm talking about pre-approvals, I am not referring to those quick ones you do online where you just punch in a bit of information. We're talking about a process that you'll be really aware you're going through because your lender's going to ask you for an awful lot of information. And I'm going to cover that coming up shortly. Then we have home inspections. These are optional, but always recommended by me. Assessments of your property by a certified inspector before you finalize the purchase of your home. And appraisals. These are independent estimates of a property's market value that are often required by the lender to confirm the home's value before they finalize their financing for you. Next, we have the Agreement of Purchase and Sale. So this is the APS. This is what we refer to commonly as the offer. This is the legal contract between the buyer and the seller, and it outlines the terms of this purchase of the offer. The conditions, these are the clauses in the offer that have to be met, like financing or inspection for the sale to go through. So the buyer puts conditions on their offers. For example, that they will have the home inspected, that they will have their financing approved, that they can get insurance on the home. Next, we have the down payment. This is the portion of the home's purchase price that the buyer pays upfront, not covered by the mortgage. And it is typically a minimum of 5% here, but it could be more. And you can always opt to put more down if you like. The deposit is different from the down payment, but it comes from the same pot of money. So this is a sum of money paid by the buyer after your offer is accepted. How much it is written into the offer, and this goes towards your down payment when the deal closes. And closing costs. So these are expenses that are separate from your down payment and deposit. They're paid at the time of closing, and I'm going to go over these in a little more detail later. So another really good question to cover is who is actually a first-time home buyer? So in Canada, what this means is that within the 4 years prior to the purchase of this property, you didn't own or occupy a home that you or your current spouse or common law partner owns. And this can include people who have never owned a home before, people who haven't owned a home in the last 4 years, or people who have experienced a recent breakdown of a marriage or common law partnership. So if you have recently experienced the breakdown of a marriage or common law partnership, you may still be eligible to be considered a first-time home buyer, even if you owned a home previously. And why does it matter? Well, it doesn't matter for this seminar. Anyone can watch this or learn from it. But to qualify for certain first-time home buyer programs in Canada, you have to qualify under this definition of a first-time home buyer. Now, seller, buyer, or balanced market. This is an important thing to consider going into 2026 in Nova Scotia. Post-COVID, we had a very aggressive seller's market in the Halifax area and, in fact, all over Nova Scotia for some time. And what this means is how much inventory is available to people looking to buy a home. So less than 4 months of inventory, you have a seller's market. Now, at some points around, say, 2021, we had about 1 month's worth of inventory or less. 4 to 6 months of inventory is looking at more of a balanced market where the advantage isn't necessarily to the seller or the buyer. And then more than 6 months worth of inventory, we would consider that a true buyer's market where the buyers have the advantage because there's not as many of them and there are more houses. So seller's market is when we have very few homes and lots of buyers. Buyer's market is when we have a lot of homes and not many buyers. And then you have the balanced market. And heading into 2026, we're looking at a balanced market in most of the Halifax area, though that can vary neighborhood by neighborhood, depending on the popularity of a neighborhood and how many homes are for sale there. But that aggressive seller's market that we did see like in 2021, 22, that is not the current situation. All right, so let's just get into the 6 basic steps of buying a home. They are pre-approval, hiring a realtor, house hunting, making an offer, conditions and firm up of the offer, and closing. And we'll start right away with pre-approval. So why are realtors always talking about pre-approval? Why do we need you to do it? Well, the most important thing is to ensure that a lender is going to give you a mortgage. There's a lot more to pre-approval than simply having a good income or a good job or a steady job. And they're going to ask you for a lot of information. So it's really important to ensure that you have that letter or email from them that says, yes, conditionally, we're going to approve you for X amount. So this understanding of how much they're pre-approving you for lets you set your budget. And it doesn't mean that the max they're pre-approving you for is the most you want to spend. You might want to spend a lot less than that. That's up to you. But it gives you an idea of where the top is of what they're willing to offer you. Some sellers may still ask for pre-approval as well. They may ask to see that you have pre-approval. And the reason they do that, they did it more often in a seller's market where they had a little more choice. But the idea is that when they're accepting an offer, they're taking their house off the market. There's a lot of risk involved, and they're just trying to mitigate the risk by ensuring that the buyer has done their part of the work, which is getting pre-approved before they make their offers. So what do you need to do to get a pre-approval? You need to contact a lender or mortgage broker. You can go with your bank and talk to the mortgage officer there if you like. I often recommend people go to a mortgage broker who talks to a bunch of different lenders and looks at a variety of different products. Anyone there should be willing to talk to you free of charge and give you an idea of what's possible. Get your paperwork together for them. They're going to ask for an awful lot of stuff, and I'll go over some of that in a minute. They will then get you a pre-approval letter, which is usually an email these days. And if for some reason you can't get pre-approved, what they should be doing then is giving you that roadmap or plan to get you where you need or want to be. So what are they looking for or at? They're looking for a credit score of 680 or above. They're going to ask about your income and employment status, your notice of assessments from the CRA, and if you're self-employed, they're probably going to be looking for 2 years worth of records for those. They are looking for financial statements, funds for the down payment, because you can't use a loan typically to pay for your down payment because they see that as a loan for a loan. So they'll be looking to see where the funds are from your down payment and where they came from, your savings or were they a gift, that sort of thing, and your gross debt service and your total debt service. And I'm going to talk about those a little bit. But first, so down payments. Home prices in Canada, if it's $500,000 or less, the minimum you can put down is 5% of the purchase price. $500,000 to $1.5 million homes, then you pay 5% on the first 500,000, 10% on the portion of the purchase above 500, and anything over 1.5 million, they're looking for 20% down. Now, all of these can vary based on your things such as your employment, your credit score. So they're going to determine what the minimum down payment is in your situation. GDS and TDS. So this is your gross debt service and your total debt service. This is another really important factor that they're going to look at for your pre-approval. Gross debt service is the percentage of your gross income monthly that goes to housing costs. So that would be mortgage, property tax, heating costs, and if you have a condo, 50% of your condo fees. And they would like this to be 39% or less of your gross income before taxes. Your total debt service is the percentage of your gross monthly income that goes to housing costs and all the other debt that you service. So car loans, lines of credits, credit cards, any of that. And they would like that to be 44% or less of your income every month. So those are important numbers to remember when you're thinking about the process of purchasing a home. These are really key figures for them. Okay, so we move on to step 2, which is hire a realtor. And of course, I'm going to say that, but there's always a portion of the population who are not going to or do not want to work with a realtor to buy or sell a home. And there's nothing wrong with that. Uh, for those who do, for buyers who want to use a realtor, the services of a realtor in Nova Scotia are typically free for buyers, and your agent is contractually obligated to work in your best interest. They're there to guide you, advise you, protect your negotiating position, make sure you understand what's happening at all times, help you with the paperwork. There's a lot of work involved with this, but it's a complicated process purchasing property. So, how do you find a good realtor? You don't just hire the one who's talking to you on camera, even though she'd love you to. But what you do is you ask your friends and family for recommendations. Don't just ask them who they liked working with, ask them why they liked working with them, or if they didn't, why they didn't. There's a real mix here in terms of you need someone who is experienced and knows how to do the work, but also someone whose personality you can work with, because you're probably going to spend a fair bit of time with them looking at homes, and you need to feel like you can trust them and relate to them. So feel free to interview a few realtors. Sit down with them, ask them questions, have them explain the processes to you, and see who you feel like you have a good connection with on top of that experience and knowledge. Okay, step 3, one of the fun parts, house hunting. So it's really important before you go out house hunting. I'm one of those people who believes in process upfront all the time. It helps save a lot of stress and helps you be prepared for anything. So I think just coming to a seminar like this or watching this is part of that preparation. It helps you understand the process before you start. So first, drop a list of needs and wants and understand that the needs are the thing that should guide the process here. If you need 3 bedrooms, that needs to be separate from things that are you would want or that might be nice to have. So those are really important. See as many houses as you can. Now, back in the seller's market when things were very aggressive, there wasn't much inventory and we didn't have a lot of opportunity to go out and see a lot of houses. But currently, we have more inventory, so it is possible. And I always encourage people, see as many houses as you can. Even if you think you might be a bit on the fence about a house or you're not sure, let's go see it. Every house is an education, and what you don't like is as important as what you do like about homes. And surprisingly, that can shift sometimes. Now, when we're house hunting, it's really easy to see the good things about houses. They're right there in front of you. So it's important that, of course, we're appreciative of those good features, but we need to be critical, especially if you feel like, ooh, I really like this house. Now is the time for a really good critique of the house, its condition, its layout, its function, the things that are difficult to change about the house. So be ready to be critical, but be ready to be flexible at the same time. The more flexible you can be about things like location or layout of the home, if these are things you're able to be flexible about, they give you more options to look at. And be prepared to move fairly quickly. It's not like it was in 2021 where you had 6 hours to make a big life decision on this, but being prepared and being ready to move can mean that if there are no other offers on a house, you can get your offer in, considered, and possibly accepted before anybody else might show up and create a competing offer situation for you. So being ready and having all your ducks in a row, these are why things like pre-approval is so important. You're ready to go at the moment that you find the house that you think you're interested in. And remember, even when it seems like, if we don't get an offer accepted for some reason, there is always another house. So while this may be a very stressful process for some people, or you may feel a big emotional attachment to one home that you've offered on, there's always another home and we can always find you something. Okay, so step 4, making an offer. You found the home you like, you want to make an offer on it. Every offer has similar paperwork, but every offer is a little bit different. So your realtor works with you on this to advise you based on sort of the property itself, your budget, the market at the time, the market in that area, any competing situations that might be going on. All of this is wrapped up into what's going to make the best offer for this property. When you make an offer to a seller, they can accept it, they can reject it, or they can send you a counteroffer. So, what makes a good offer? There's a few different things that make up every offer, and they can vary depending on the importance of these to the seller, if we understand them or don't. So, price conditions, closing date, and sort of the deposit, but not so much here in Nova Scotia. But the importance of any one of these can vary from seller to seller, and we try to find out as much as we can when making an offer about what the importance might be of some of these. So, price, what are the factors? Well, what is the home worth to the market? The list price isn't necessarily the market price. In very aggressive sellers markets, they may underprice a home looking to drum up a lot of interest and a bunch of competition. But in a more conservative market like we're seeing now, you may see them list at or above market price, or what they believe to be the market price, because they're prepared to negotiate a bit. So the list price isn't necessarily what the market will settle on. The home also is, so it's what is the home worth to the market, but then how many days on market are we seeing this? So if the home has just come on the market, that's one thing. There may be a bunch of people who are interested in it, but if the home's been sitting on the market for 30 days, 60 days, 90 days, we may take a different approach to that offer. The condition of the home is really important. How well that home has been maintained, has it been renovated, what are the quality of the renovations? All of these are going to lead towards what is that home actually worth. And then what is a home worth to you? You could have two homes that are exactly the same, but have two very different locations. And if one location is the location you're looking for, that home, even though it's identical in every other way, is likely worth more to you. So each home can be worth a different thing to a different buyer. So some common conditions that we put on the offer. So you write the offer up, you put in your price, and then you consider what conditions you're going to put on the offer. Nova Scotia is not a market where we see no condition offers very often. Even during the very aggressive sellers market in, say, 2021, it was rare to see fully no conditional offers go in, simply because buyers here aren't used to it and the market generally didn't make it necessary. And currently we are not in a situation where most people would feel it was necessary to waive conditions. They are there to protect you and make sure you get through the deal. So some common conditions that we would see are having the home inspected. This is the home being inspected. If you're on municipal services, you might want to inspect the sewer line going to the street. That can be a very expensive thing to fix if there's a problem. If you're in a rural area, water quality, well function, septic function, these could all be tested as well. These are non-invasive inspections. So it's important to understand that while home inspectors will do the best they can, and they give us a very good picture of the home at the time you're looking at it, they can't see through walls. They're not magicians. But it is a really great snapshot of the home at that moment. We also have really common condition of financing approval. So this is when the lender then looks at the home that you are putting an offer on, and they review your file, your finances, and also the home. And this is where they may decide they want to call an appraisal of the home to make sure it's worth what you're offering for it. And then we also have insurance, and that doesn't mean you're going to get insurance. You're just going to get a letter of confirmation from an insurance company that says, yes, we would insure this property. The sellers may have filled out a property disclosure statement, and you could review that. And we always have the lawyer review as well. Now, the bulk of what the lawyers do happens after the deal firms up, but during this part, they will review the documents and just make sure they all look in order. So those conditions can be placed. There's also a variety of other conditions, or you can place your own conditions on it, but your offer is then conditional on you satisfying these and saying, we're good with these and we'll waive them. The time that you have to do this is set out in your offer. It's usually around 10 business days. Moved ahead a little fast there. So the time you have for those is usually around 10 business days. And at the end of that, you will have to provide a waiver to the seller's agent that says, yes, we in fact are satisfied with these conditions. Okay, so now you're making this offer, you have your closing date as well. So matching the seller's preferred closing date can give your offer a bit of an advantage. And why would you want to give it an advantage? Well, if you are competing with another offer, it can be very helpful to match the time that these sellers would like to leave the property. Or if you are offering maybe a little bit lower, one of the things you can do to mitigate that is offer to close when they're looking to close. So if your seller wants a quick closing date or something that's a little further out and you can match that, that's often a way to make your offer a little more interesting to them. So we can always ask when the seller would like to close and see if we can match it. if it's possible. Now your deposit. So the deposit in Nova Scotia isn't generally something that really affects an offer too much. The amount of the deposit and the date it's due are set out in your offer. There's no set amount in particular in Nova Scotia. They don't tend to be very big. Your realtor will advise you on how much they think is a reasonable deposit for this. You only pay the deposit if your offer is accepted. And once the deal closes, your deposit forms part of your down payment. So again, that comes out of the same pot as the down payment money. So competing offers, a little plus, some extra information here. You don't see them as much as you do as we did in the past years, but in some areas of Halifax, we certainly do still see competing offers. So how do they work? Well, if two offers are coming in at the same time, we do not know the contents of another offer. They don't know the contents of our offer. All offers are confidential. So the only people who know what's in them are the seller and the seller's agent. So we don't know what's in them, but they will typically tell us how many offers they do have, which helps people gauge how aggressively they might want to offer on something or whether they're even willing to participate in that. So typically, if they think they're going to get competing offers, if they put a property on and they know they put it at a very competitive price, they may ask for all offers to be in at a certain time and date, and that way the sellers can look at all of the offers at once. And in those scenarios, it is very helpful to understand how many other offers there are. Offering below asking price. Now, that's not something we had to do recently, but traditionally, this was how it sort of worked in Nova Scotia. So, in a more conservative market, like a balanced market or in a buyer's market, the sellers may list at or a little bit above where they think the market value of the house is because they realize they may have to negotiate down a little bit through counteroffers on the price. So the buyers have a little more advantage than they have had in previous years because there are more homes to choose from. So negotiations over things like price, inspection items, etc., are more likely. So there are situations now, certainly very commonly, where we're going to offer less than asking price, and then we're going to likely expect the sellers to counter us and move back and forth a bit until we find a spot where they can accept something. So, step 5 is firm up. So, this means you have completed whatever conditions you put on that offer. Once those conditions are completed, your home inspection is done, you've received your approval from the bank for the financing for this property. We have you sign a final waiver that is then sent to the seller and the seller's agent, which says you have waived your conditions and the deal is now firm. So, what firm means is sold but not closed. So we do put a sold sign up on the property. Let's look at what happens in this period if you're going to terminate the offer, because if you're going to terminate it, you're hopefully going to do it before it firms up. So you've put conditions in your offer. All of those conditions are potentially grounds for terminating your offer. So let's take a common scenario. You have put a financing condition on your offer, and the bank, for some reason, has decided they are not going to finance this. Maybe you didn't have your pre-approval ready and you didn't realize that they weren't going to offer you financing, or maybe there's something about the home, that's a much more rare situation, that they've decided they don't want to offer you financing for that home. So if that happens and they decide they're not going to offer financing and you have a financing condition within the period of conditions that you put on your offer, you can then terminate that based on financing and potentially you get your deposit back. In most scenarios, you will get your deposit back if you terminate on one of your conditions within that time frame. All transactions vary, but that is typically how it works. So the question we get from people is, can I get my deposit back? What happens if I don't like the results of the inspection? So if you have the home inspected, you don't like the results, maybe they don't want to negotiate over something that you feel is important, or you simply see too many items on the inspection and decide you're not interested in this house anymore. As long as that was a condition of your purchase, of your offer, and as long as it's within the time frame you set out in the offer, and you terminate properly with paperwork, then that is how you get your deposit back. If you were to firm up on the deal, send them a waiver, say we're happy with these conditions and we're firming up, we're waiving them all, and then later, before closing day, you terminate. At that point, you are less likely, if not completely unlikely, to get that deposit back. And the sellers may be at liberty to take legal action for any costs they incurred. So firming up is serious. We need to be sure that you're ready to do it. And if you're looking to terminate the offer over something you found, it needs to be done before firm up date. All right, step 6 is closing. This is the best thing. This is where you get the keys to the property and it becomes yours. So the date for this is set out in the offer, and it is the date that you actually take possession and can move in. Now, pre-closing, a week or two before closing, you're probably going to meet with your lawyer within that time frame, and they're going to review all the paperwork with you and give you your final costs for your down payment and the closing costs, which I'm going to discuss in a little bit more detail. And then on closing day, your realtor and you do a walkthrough. Some people do it the night before. Usually we do it the morning of closing. So we'll get there first thing in the morning and we're going to go through the home and make sure that everything is as it should be, as it was when the home was inspected. And if everything is okay, then we contact your lawyer and they begin the closing process. So this process can happen quickly or it could take the bulk of the day, depends on a lot of things, but the lawyers are doing the process where the deed and the funds are going back and forth. When they finish, they will contact you and let us know that we can give you the keys to the home. And that could take the better part of a day. So this is why we always tell you don't plan to move in on closing day. Don't plan to have any services done to the house because you may not actually get the keys to the home until later in the day. So what happens if there's a problem at the closing walkthrough? So let's say we come through and we're testing the appliances, because when we're walking through the house, we're checking everything, and the washer leaks, which I have had happen. So this is a smaller issue, like a leaking appliance. And what we'd like to see is that the seller will repair or replace this. So we can contact the lawyer immediately, let them know we have this issue. We'll probably have to send them some photos and videos of this, and then they will ask for a holdback. And this means that some of the funds that you're offering for the house are going to be held back until this is repaired or replaced. And this will allow the closing to go forward. So your lawyer will talk to their lawyer, they'll arrange all of this, and they'll let us know that we can proceed. So that's a way to manage smaller things that happen. Let's say something bigger happens. So between firm up and closing day, a tree falls on the house and significantly damages it. So it is up to the seller to keep the property insured until the day of closing. So there's insurance on the house. Now, if it's a major new damage like this that we find during the walkthrough, such as a tree sitting in the living room, then the buyer can typically review the insurance that's available and decide if they would like to terminate the offer at that point or go forward using the insurance to manage the issue. Now, closing costs. So these are something that I like to always make sure that buyers understand because they're significant and they are separate from your down payment. So you need to have extra money available for these, and they sometimes sneak up on people. So they're typically going to be 2 to 3% of the total purchase price of your home. They are not part of your down payment, so you need cash separate. For a $500,000 home, imagine somewhere in the range of $12,500 of closing costs. What do they cover? The bulk of it is the deed transfer tax. So the municipality charges this tax to transfer the deed. It's 1.5% of the purchase price in Halifax and in most municipalities in Nova Scotia. The legal fees are what the lawyer is charging you, typically somewhere in the range of $1,000 to $2,000, covering title search, registration, document preparation, couriers, all the stuff they're doing behind the scenes. Title insurance, which is a one-time cost, $250 to $400, and any adjustments that are being made. So if the seller has paid their property tax in advance, then the amount that they've paid for past the closing date, when they don't own the property anymore, is paid by you through closing costs back to them. We also require fuel tanks like oil tanks to be full when you take possession of the home. Nobody wants to take possession of a home in the middle of winter that has no fuel in it. So those have to be filled by the seller. They send the receipt to the lawyer, and then this forms part of your closing costs where that goes to the seller because, of course, you're going to use the fuel. So any adjustments of that sort are also added in. Other costs that you could be looking at when you're purchasing a home are home inspection, $500 to $600 for the basic home inspection. If you're checking the sewer line to the street, which I always recommend, $250-ish for that. Well, water, and septic if you're on a rural property. And I always recommend all of the inspections. For me, this is a bit of money up front for a little bit of peace of mind to understand where the systems are at that in the home that you're purchasing. So you would be testing water quality, you would be looking at the quantity of water in the well, is it sufficient, and a septic system inspection. And those can add up to somewhere in the range of another $1,000 to $1,200. If your bank or lender asks for an appraisal of the property, that is going to be yours to pay for. So that's $300 to $400. And don't forget things like moving costs, which can be very variable depending on how far you're going and how many people with a truck you know. So those are the 6 basic steps for buying a home: pre-approval, hiring a realtor, house hunting, making your offer, your firm up of the offer, and the closing day. So who would you need for this whole process? All of these people are optional, except perhaps save the lawyer. I would always recommend that if you felt like you were going to do this on your own, you at least get a lawyer to make sure they go over the paperwork for you. But realtor, mortgage broker, or mortgage specialist from your lender, a home inspector, a lawyer, an insurance broker, or your insurance agent, and possibly contractors or tradespeople if we need to call someone in to take an extra look at something. But these are the basics of the 6 steps of buying a home. If you'd like to get a free home buyer's guide that has a lot of this information in it, just snap that QR code right there or look at the link below. And as always, if you have any questions about buying or selling a home in the Nova Scotia area, get in touch anytime because I am always happy to answer your questions.